Hey everybody, it's Matt Stark here with Windermere Real Estate. It is the end of May here right now, so I just wanted to kind of stay consistent, and I always want to record one of these videos at least once a month, just to talk a little bit about the market, what we're seeing in terms of the trends here, not only for the month, but maybe also comparing to the same time last year, and just using this information to hopefully help you make good decisions here with your real estate investments. So, one thing I always track every week, every month is just the total active inventory here. So I looked back at the same week last year, like the last week of May, there was about 1,234 active listings. This month in May 2026, we're at 1,704. So almost about 40% higher. That's been a pretty consistent trend here this year, anywhere between about high 30s to low 50% more inventory than the same time last year. The peak inventory that we normally hit in any given year is usually going to be in the mid to late summer. I looked back at the peak inventory last year in 2025, and it was like the third week of August. We had 1,661. That was the highest week of inventory throughout all of 2025. So at 1,704 active listings right now, we've already surpassed last year's peak, and we're only in May. To really think about it, if we continue on this same trend as we get in later into the summer, it's probably very likely that we're going to end up in that 2,000, 21, 22, 2,300 listings as a peak number for this year. So significant. I mean, those are not small numbers, and it's not small percentages in terms of that inventory growth year over year. In terms of days on market, though, it's still pretty decent. I mean, it's about 38 days right now. And, it's not bad for this time of the year, as well as considering how much inventory we have on the market. We're not sitting here with 100 days or 120 days. It's only about 38 here right now. But how does all this equate to price? That's a big question, I think, that a lot of people are asking. Is like, we all know there's more inventory. We all know, there's less closed sales. How's that really affecting price here? And, I looked at the county here year to date. It's only down 2.6%, which really isn't that bad. That being said, I see, different parts of the market here have pretty dramatically different declines in terms of the average sale price. I pulled up here two today that I think are a pretty good example. They're both in Bothell, Washington. One is 98011 in terms of the zip code. That's South Bothell versus 98012, which is just to the north of that. So year to date, South Bothell 98011 is down 17% average sale price. So that's no small number. 98012 is down 3.7%. So more in line with what we're seeing throughout the whole county here. Those areas that saw a lot of appreciation there, like South Bothell, those seem to be the ones that are coming down the furthest, where we've seen the most appreciation there, which, makes sense. As we have a lower price point, there's less room, to go down in that average sale price, and more buyers that can afford a lower price property. So, I hope this kind of gives you a good, idea in terms of the market, the whole trends, but also it can vary pretty significantly just based on the local area. So, if you have any questions about your property here, obviously, the market for your city, your zip code, your property, etc., please feel free to reach out here anytime. Always happy to do some research and share some good information with you. Thanks so much. Bye-bye.